Hello everyone, I'm Chris Kapches, President of Chestnut Park Real Estate, and today I'm going to provide you with the May market report for the Greater Toronto Area. In order to put it in some perspective, I thought what I would do is provide you some numbers as they relate to what's happened in the market since the beginning of the year, and in particular starting with March. March was a year in which all sorts of records were broken. All the pent-up demand of the pandemic, the great interest rates, everything was at play to really push the market to stratospheric heights. And in March, we did 15,600 plus sales. That was the zenith of this, I'll call it pandemic marketplace. Then we moved to April, and in April we saw a 12% reduction compared to what was happening in March, and the numbers dropped to 13,650 sales. Also an incredibly high number, notwithstanding that it came off of March's highs. And then we hit May, where we find ourselves today, at least as far as this report is concerned. And in May, we dropped to 11,951 sales, which is a 23% drop from the numbers that we did in March. I have to re-emphasize that even though we have dropped for 3 consecutive months, and without getting ahead of myself, I'm fairly certain we'll see a further drop somewhere in the neighborhood of 6 to 8% in terms of property sales for the month of June. But even though we've dropped, we've come down to still extremely high sales numbers. You can't compete with that March number that was driven by those pandemic factors that I just mentioned, but very, very strong numbers notwithstanding that they have come down. So in May, almost 12,000 sales. It's almost record breaking. Only May better on record was back in 2016. So that's the perspective that we have to keep in mind with these numbers, even though they're making their way down, and even though we're going to see numbers come down a little bit more in June based on early indications as to how the market is doing. But to highlight a couple of things that I think are worth noting is the sale price. We have seen average sale prices hit record levels almost every month in 2021, and May was no exception. The average sale price came in at $1,108,000, and that's for all properties sold right across the GTA, which includes almost 3,000 condominium apartments, which is the lowest price housing form that we have in our marketplace. But some other numbers that are just literally eye-popping. There's no other way to describe them. For example, a detached property in the 416, the city of Toronto, is now coming in at $1.7 million. It wasn't long ago before $1 million seemed like an exorbitantly high price. But here we have 1.7 million plus to get a detached property in the city of Toronto. Even more startling is the fact that semi-detached properties are now selling at $1,326,000. Numbers like we have never seen before. They're not quite as expensive in the 905. The 905 detached are $1,300,000 plus thousand, semi-detached not even $1 million yet. So clear discrepancy between what we're seeing in the 416 and in the 905. More sales are taking place in the 905, again, probably because the price points are lower, but it's the 416 that's really driving those numbers up. In the 416, average sale price is now over $1.1 million, closer to 1.125. Crazy numbers like we've never seen before. And they're sustained by the incredibly low interest rates. There's going to be some impact in the month of June, and I think we've seen some of that because the stress tests are kicking in and people are going to have to qualify at a higher number. But in my opinion, that's only going to impact people at the lower end of the spectrum as far as affordability is concerned. Those that already have properties, have already built up equity, are still going to be able to engage in these exorbitant house prices. Condominium market seems to have come back with people being vaccinated, with people being safer in the city. We're seeing condominium apartments, both sales and average sale prices go up, not nearly to the same extent as semi-detached and detached properties, but rising nonetheless. Almost now to pre-pandemic numbers, and I think by the end of June they will be either at or have exceeded pre-pandemic numbers. Just for illustration, in the central core, now we're looking at condominium apartments as an average sale price almost approaching $800,000. So some tremendous numbers. What's going to happen as we go forward? Stress test is kicking in, as I indicated. It's going to impact the lower end of the market. We're seeing more inventory come to the market in the month of May. Almost 20,000 properties came to market. Huge number. As more inventory comes to market, it should give buyers a little bit more choice and the ability to pause and do a kind of an assessment as to whether or not a property is worth the amount that's being asked, as opposed to the situation that we've seen ourselves in, these frantic multiple offer situations where people pay numbers that are absolutely exorbitant. We'll see that happening, and I think, as I said, we'll see the numbers coming down a little bit, and if we get a little bit more inventory, I think we'll see a little bit more of a leveling off. We're far from a balanced market. We will not see a balanced market until such time as interest rates go up. Interest rates stay as low as they currently are. We're going to always see this tension in the market, but less so than we have experienced in the early part of 2021. So as always, I look forward to the next market report. Very interesting stuff that's happening in our market, a market like we've never seen before. But I do think it's starting to mellow, and I think it's starting to plateau, and I'll be able to demonstrate that next month when I give you the June data. Thank you.